Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Wednesday, December 24th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I had to find some area here in Chicago with some lighting in order to shoot you guys a video. So I'm doing the best I can over here. So gold and silver hitting a historic rally here, continuing to push on to all-time highs, $4,555 an ounce. And the rally in the precious metals has really been underpinned by those elevated central bank purchases, the inflows into the ETFs, big jump in that silver market yesterday, with total gold-backed ETFs rising every month this year except May. Now, gold has gained about 70% this year, and silver has risen about 150%, on track since the best annual performance here since 1979. You also have platinum futures hitting a record high. I talked about that with a lot of the clients here over the past couple months, that I believe that once we surpass that 2,000 mark, it would be a quick move on up to all-time highs. So we saw January platinum soar to a record high of $2,395.60 per ounce, largely due to those limited supplies and those high borrowing costs. It's seen gains for 10 straight sessions here, making it its longest winning streak since 2017, and it's risen over 150% this year. And a surge is happening on indications of market tightness overseas, leading banks to store platinum in the United States here as a safeguard against any possible tariffs. Currently got over 600,000 ounces of platinum held in U.S. warehouses, a figure that's much higher than usual. And traders are awaiting the results here of Washington's Section 232 investigation, which may lead to tariffs or trade restrictions on the metal. So that's going to be a key thing to follow and track. I would make a Google search on that, set an alert, and anytime it's mentioned, you get the story that's going to be surrounding that. Now, you look at copper prices. That's another one that we've talked about. Many clients here working with Blue Line Futures have been long some of these metals over the course of the year, with copper futures extending its December rally up about 36 to 40% on the year here, breaking out above that key resistance level, $5.50 per pound here, on fears of tighter global markets coming into 2026. A lot of people I've talked about it, I've really believe that structurally underpinning this copper market, I think that copper is one of those metals that will continue to march higher. I believe that that's the turtle in the race here against the rabbit, the hare, everything else. So a series of mine outages and threats of U.S. import tariffs have really led to traders pouring this metal into the country as well. So demand for copper, it continues to grow here with massive quantities required to build out those power grids, the new energy infrastructure, the manufacturing really to feed the power needs of these artificial intelligence data centers. So looking at some sectors and some spotlights, well, mining stocks, they are going to be back in focus here as gold rises above $4,500 an ounce for the first time. It's really those escalating tensions also in Venezuela, the expectations for the U.S. interest rate cuts, silver, platinum hitting record highs, copper having a record also in London. So you look at the broader markets and the bigger picture. The only thing I could say on the stock market here is that Friday, generally a good day for trading in the S&P 500. If history is a guide here, you look at some data that's been compiled by Bloomberg. It shows that the day after Christmas has historically been one of the more consistent positive days here for the year in stocks. Now, remember, past performance, not indicative of future results. It's just one thing that we monitor here as we've got a lot of time on our hands, see how some of these seasonals play out. Now, you look at the interest rate cuts here. We did have better GDP data come out yesterday here, so interest rate cut expectations are declining. When we saw that GDP release, gold futures actually dipped negative for the moment here. And it tells you that if you get a stronger economy, you're probably going to see some of those interest rate expectations continue to decline. If you get a washout in the gold market, it could be where you get that first big correction in the silver market. So just be aware that the data is playing a role on things, specifically in these precious metals markets. Now, it has smaller of an impact than those ETF flows, than the central bank purchases have right now, but we want to keep an eye on that because a lot of times the dynamics and the factors that are impacting the metals here, they tend to rise up, they tend to come down. Remember, there are periods of time where we talk about, well, the dollar index is going up, treasury yields are going up, and it's weighing in on the gold market, which is weighing in the silver market. Now those seem to be less impactful at the moment, and what's more impactful is, again, the ETF flows. Now, if you look at the economy here, we're going to see those initial jobless claims come out at 7:30 Central Time. That's another thing we want to monitor is the labor market. So if the labor market starts to come back, if you start to see energy prices start to come back, that's going to weigh in again on the Federal Reserve and the expectations for rate cuts. So you look at the markets, they are anticipating only a 13.3% chance that the Fed cuts rates 25 basis points here at that January meeting. You go out to March, it was about 45% yesterday. Now it's down to a 40% chance. You look at some of the outside markets, you go to the dollar index, no real change there, 97.52. The euro currency for March, 18.41. 10-year treasury yields, they jumped up to 4.2% after that data release yesterday. They trickled down, they're right around 4.17%. Recent low, 4.11%. So we want to monitor that as well as any kind of breakout to the upside over maybe 4.25, any breakdown below that 4.10%, because these could be either headwinds or tailwinds for some of these metals markets. Bitcoin future kind of stuck in this holding pattern. This 85 to 90 range here has been recently kind of its support and resistance level. You look at the S&P, the gamma exposure, well, the market makers, they're currently long, and what that does is it indicates lower volatility in the market. They delta hedge, so what happens is when the market rises, they sell futures contracts. When the markets dip, they buy futures contracts here until any kind of range is broken out. You look at Europe and Asia, well, French and UK stocks shares, they were muted, thin, holiday trading volume here, kind of waiting to see what's happening. They're closed for the Christmas holidays. You go to Asian stocks, well, they eked out a small gain here. You had losses in Japan, South Korea, and those were offset by some gains in China and Vietnam. The MSCI Asia Pacific Index did rise for its fourth straight day, so there is some optimism in the market. Now, these are where things get interesting in the metals markets here. So on the ETF flows, they were selling gold yesterday. They were buying silver, platinum, and palladium. The gold, those total gold holdings here, they did decline just a bit. So we saw total gold ETFs, they've risen about 18% year to date to 97.8 million ounces. They cut 99,000 ounces here yesterday. It was the biggest one-day decrease since November 20th here, and gold's up about 71% year to date. Silver, this is where things really got interesting because I haven't seen a number this big here since I've been tracking the ETF flows here. The ETFs added 17.2 million troy ounces of silver to their holdings yesterday. Huge increase, biggest one-day increase since March 11th, 2024. That's probably around the time when I started really tracking the ETF flows here. Platinum holdings increased by 20,000 troy ounces. That's the 7th straight day there. Palladium holdings increased about 9,000 ounces for the 15th straight day. Now that gold or that silver jump right there, that takes the gold-silver ratio down to about 62 to 1. That's the lowest level since June of 2014, when gold was priced at about $1,300 an ounce and silver was right around $20 an ounce. So you can see how far we've come, and you can see how the ratio kind of travels along with the prices here, with things getting overextended, things getting overbought, things getting oversold on the market. So right now we're going to want to continue to monitor and watch these things. You know, you look at some of these outside markets and how they've played out, because gold and silver and platinum, this historic run up right here, if you look at the commodity space, and if you were to sit next to me and you were going to listen to what a lot of the clients are trading and things like that, just a few months ago, it was feeder cattle, it was live cattle, market participants were really going after those markets. They finally did correct. Some things changed in the market, some supply-demand dynamics did change, and those prices come down. We looked at that massive sell-off where it seemed like it was the end of the world in April here with the Trump tariff tantrum, and everyone was just throwing everything out. And what happened? That dramatic oversold, that massive correction, 19% on the S&P or 20%. We stopped and we turned around from here. Remember what happened with the energy space just a few months ago with US, Israel, Iran, this just massive geopolitical eruption that happened where the US had to drop bombs on Iranian nuclear facilities, and oil prices, what did they do? They skyrocketed up to $80. People were talking triple digit, 150, 200. I was seeing those calls go off the board. I saw a lot of clients purchasing those types of calls, and what happened was the dynamics had changed and the market had come down. And all I'm saying here is that when you get euphoria in a lot of these markets, the markets do correct in some type of way here. Something structurally changes in the market. So we just want to be aware of what could possibly happen in there. And I'm not talking about the fake AI films that are floating around YouTube. It's some Asian guy. You can't rattle off the numbers right because AI is unable to read decimal points, percentages properly, and coming up with a lot of fake different news out there. If you ever want to know margin requirements, you want to know my history on margin requirements. I've been involved with the gold, silver market for over 20 something years as a licensed futures commodity broker. I've been through 2008. I've been through 2011 here where we've had historic run-ups and changes in margin requirements and things like that. I could tell you those experiences of what I saw and how it all played out and actually how to change your positioning here to avoid some of those higher margins by reducing your margins, but having that same exposure to the market or increasing it. So just different ideas and different resources that I can bring and Blue Line Futures could bring to the table for those of you that may be concerned or being misguided by a lot of fake AI YouTube videos that are floating out there. So I can tell you, me, I'm a real person. Flew here from Florida back up to Chicago. Gonna stop in the home office in a little bit here. I feel like I'm jet lagged and the flight was only about 2.5 hours. But when you sit with an 18-month-old baby, holy cow, or infant, toddler, whatever you call them at this level, man, it's a lot of work out there. So no rest, no pleasure in that. So, but if you guys got any questions, shoot a call. Send an email to info@bluelinefutures.com. We're going to be continuing to put out some different guides here on really, it's going to be 2 of the technical chart patterns that really traders want to watch, especially in these types of things for looking for key reversals, double tops, things like that in these markets to help prepare you for any kind of correction that may lie ahead. So remember, futures and option trading involves risk of loss, may not be suitable to all investors. I hope you guys have a great, wonderful Christmas, great holiday, get to spend some time with your friends and your family. Again, you need anything, reach out. We're always here for you. Take care. Good luck.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.